Well, hello everyone. Welcome to Short Verticals. My name is Barb Armstrong. I'm a coach with Schwab and delighted that so many of you are here live taking advantage of webcasts like this. Thank you for being here. We have Kevin Horner in the chat with us today. And as I thought about kind of my theme for today. And as I was going through and looking for example trade setups, I thought about the power of repetition, that when you understand a strategy really well and you understand your trading plan really well, you can go through and just look at setup after setup after setup and go, this one looks delicious. Nope, doesn't meet my requirements. Or this one looks good. Yes, it is good. Place a trade, move on. And, so we do not have to dedicate our lives to this and walk around with flat behinds because we spend so much time sitting on them. If this is a strategy that you're interested in developing mastery of, all you have to do is practice, or one of the things we have to do is practice. So we're going to practice. I have one trading. Get ready, guys, because you're going to have to type. We're going to vote on what to do on this one, on the trade management side. And then we're going to look at, I have a list of 11. So are you buckled up and ready to go? Because we're going to move quickly. We've got 45 minutes. We're going to look at 11 different stocks. We're not going to place trades on them all, but we're going to go through that analysis of, is there a setup? And then does it meet our trading plan? Okay. Okay, so to all of you who are here, and I know AP 514 was here early, but to AP 514 and Wayne and Paul and Tony and Camille and the rest of the gang, thank you for being here. Also to Kevin Horner, who is very familiar with this strategy. If you've got questions, don't forget, don't neglect to ask. And just before we get into things, if you are not following Kevin and I on Twitter, man, you are missing out. I mean, I consider it part of my job to post content every day that I think you'll find valuable outside of webcasts like this. And I'm posting charts on, pretty much a daily basis where we're seeing interesting things happening. So, it's free to join. So consider this your formal invitation. Kevin Horner, CS, Barb Armstrong, CS. Yeah. So know that just before we get into the thick of things, that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements to trade options with Schwab, and not all will qualify. We use the Paper Money desktop platform, on the Thinkorswim desktop platform. So it is a great place to learn and hone your skills. And so you're going to want to be sure that you're familiar with how to sign into Paper Money. If you are not as familiar with Thinkorswim as you would like to be, one of the things that you can do is book a one-on-one session with a Thinkorswim specialist, and you can make the topic whatever you want. And they can share a screen with you if you want to work on your monitor tab or customize charts, whatever it is. I will post a link on X at the end of this class, so that you can book an appointment and take advantage of that if you are interested. Know that one of the differences between a live account and a Paper Money account is that short options are never assigned early in Paper Money. That can happen in a live account, and I've seen it happen. So don't think, oh, that's theoretical, it would never happen. Yeah, it could. And so if it does happen to you, if it's with a long vertical, that's not necessarily a bad thing. With a short vertical, it can create some angst. So we need to be aware of that. Okay. So I've got one quick announcement, and I'm going to make it very quick. And then we're going to go and have a look at what's going on in the markets. And then we're going to spend the rest of the time on the platform, placing trades and managing trades. Ben Watson, is in Orlando as we speak, ready to hit the ground running with a 2-day workshop. First day, technical analysis, second one, options. If you'd like to be there, I think the registration's closed, but if you show up, I'm sure they'll find you a seat. Same for Houston. This is going to be the last event of the year. That is next weekend. And then we kick off the new year in Dallas. And here's the link to register. If you haven't registered, you'll want to do that. I love these in-person events. It was a great way for me to immerse myself and just be totally focused for 2 days. I loved it. I actually found a bunch of notes I had taken the other day at one of those workshops. So I highly recommend them. And they're free. You just have to get there. You just have to sign up and go. Okay, so let's come out and look at what's cooking in the markets. So when we look at the S&P 500, it is up 27%. I mean, that's ridiculous. I mean, it's not ridiculous. It's fantastic. And today we hit another all-time high, pulling back just a smidge now, but a new all-time high for this market hit today. How about the NASDAQ? The NDX. So this is our tech-heavy index. It too hit a new all-time high today and pulling back just a smidge, to use a highly technical term. Smidge. TAD's another one. Where does TAD come from? Actually, I've had this discussion before and we thought maybe it's a tadpole, like not a fully formed thing. I don't know. But, could this be a sign that, we've had this, 4-day run up? Might it pull back for a day or two? Could. Yeah. Yep. Okay. What about the Russell? This is our small caps. And I would call this, and I don't know if this is an official term, but I'm certainly not the first one to say it. And I didn't come up with this terminology, but I would call this a bull flag in a stiff wind, where it doesn't do that thing like we sometimes see where it pulls back dramatically for 3 days and then bounces. And that's even more bullish when it kind of moves up dramatically and then goes sideways. But this index also hit a new all-time high, within the last 2 weeks. And then has just been kind of catching its breath. To just today, flirting with the 10-day moving average. And then how about the Dow? The Dow 30, this is the one based on the price of the stock as opposed to market cap. It hit a new all-time high yesterday. Today pulling back just a little. Okay. So there's some talk in the chat about getting ready for skiing. So yeah. So somebody's saying, could this be setting up like a double top, or could this be setting, I think you're referring to the Russell there. It could, or, it could just have come up to a similar high and could take off tomorrow. Or we could see it come all the way back down here. We don't know. Crystal ball is in the shop, right? We can just trade what we see, not what we think is going to happen. And then when we look at the VIX, it's still under 14. So, this is like low, 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 low. Didn't somebody sing a song like that? Yeah, so this is pretty low for this index. And today actually it's down a little, which is interesting given all the indices are down a little and the VIX is down a little too. That's a bit of an anomaly. Okay, so I want to come and look at, we only have 2 short vertical trades on. One is American Express, and we're just up a thimbleful here. But Oracle, and this always, I don't want to say strikes fear into my heart, but it makes me sit up and pay attention when I see this in the money. So what does that mean? We're also down on this trade. It's like, and down quite a bit today. So let's look at the trade, and then let's go look at the chart and get ready, because I'm going to post a little survey about how to manage this. And you guys get to decide. Every once in a while, we run a semi-democratic class here, and this is our semi-democratic moment in today's class. So we sold the 190 put, and we bought the 187.50. And right now we're at 186.46. So yesterday we were smack dab in between the two. And I did look at this. And I thought, well, if it moves up tomorrow, we'll be above both strikes. Right now, we're below both strikes. And if this were the expiration date and it expired below both strikes, we'd have our max loss. Now, our max loss, this is a 250 wide strike. Our max loss occurs, if this becomes worth 250. And even though it expires tomorrow, it's still like $57 away from max loss. So we could just exit this now and, you know, perhaps prevent another $57 in loss. So keep that, you know, in your hat as we're thinking about this. And then when we come out and look at this, so why didn't I get out yesterday? Because, you know, we were so close. And so today, you know, it's not looking great, but tomorrow, because it came down, bounced off the 30-day, that was looking good, then gapped up. Today, the market's pulling back a little. So tomorrow, if we don't close it out today, whatever happens, we'll exit tomorrow. But the question that I'm asking you is, do we wait one more day? And so I'm going to do this poll here, or do we just, and you know what, if it goes down again tomorrow, then we're that much closer to max loss. So do we wait one more day? Or you know what, I'm going to say, do we exit now? And you know, the corollary to that is, you know, do we wait one more day? Yep. So there's our poll. And whatever the majority is, I'll go with. You know, but we have a trading a smaller account class, and to whatever extent I can, the trades we do in this class, I treat as a companion to our trading a smaller account, which is Mondays and Fridays at high noon. Okay, so while you guys are voting on this, and so far, like we're kind of neck and neck, we're 55% yes. Okay, so let's go look at some new trades. And the first one we're going to look at is MasterCard. So with MasterCard, here we have a stock. It's in the financial sector. It's up, or actually this one I think is in the tech sector. If we come to the Analyze tab, and then we come over to Fundamentals, it's Financials. Okay, so, you know, and financials have been very strong. It's been one of the top 3 sectors. So when we look at this, you know, it came down, kissed the 30-day moving average yesterday, and is moving up again today. So could we sell something below this 30-day moving average, which looks like it's been acting as support really since August, and we're now in December? You know, so could we sell, like, I don't know, the 515 maybe? It's trading at 524. So let's come out to the trade tab. And look at this. I just looked at this. So if we look at going out 20 to 50 days, so this is a weekly. Now this is going to have less volume. Here we have hundreds of contracts as opposed to dozens of contracts. And here we have a 30-cent bid-ask spread. But, you know, it's only 35. So it's still within that realm of acceptability. So could we sell the 515, limit our risk by buying the 510. We're going to get $1.06. We're in it for 22 days. And if you do a lot of these, if it's $1 and you're risking 4, that's a 25% return on our risk. So we know this meets our requirement. It trades more than 1 million shares a day. Bid-ask spread is acceptable. We've got 32 contracts. We're only going to do one of these because we don't want to risk more than, say, 500. So we're going to come to single order, first trigger sequence, right click, opposite order, and we're going to make this 20 cents. Now, is there anyone here for the very first time? So the delta is 27. Somebody said the delta seems low. Well, the probability of this being in the money at expiration, as of where it stands right now, is 28%. That means you've got a 72% chance of it expiring worthless, but you've got almost a 60% chance, a 59% chance that it could come down and at least kiss that 515 between now and expiration. So if it does that, are we going to panic? No. Why aren't we going to panic? Well, because we've position sized appropriately. Yeah. Short put vertical, fire in the hole. And this is a weekly, we're aware of that, we're okay with it. Now, if you're saying to yourself, like, hey, self, like she's talking about this trading plan thing, like, where is this trading plan of which she speaks? you can just bring up a new window. And this is where, I put in my plug to say, you're going to want to make sure that you are subscribed to the Trader Talks channel. If you haven't clicked that already and aren't already subscribed to this channel, when you first come in, you'll see the class that's currently being taught. Okay. I did make the exit GTC AP 514. I think so. Okay. So here's our playlist. And I was just saying to someone that I'm behind just because we do a lot of things kind of outside of teaching these classes. But I do have an example trading plan for short put verticals. It's about 18 minutes long. But if you haven't watched it, it just kind of gives you a framework from which you can customize your trading plan. Okay. And so this is the example trading plan that we use in this class, which means we're looking for something bullish or at least going sideways. We're looking to enter our trade below at least one support level, et cetera, et cetera. And I will put a link to this into the chat. I will put a link to this. I think that Kevin already put in a link to this playlist, but I will put a link in at the end of the webcast if you're watching this to this session. Also, if you're new to Thinkorswim, there's just a bunch at the bottom here. All these ones here are Thinkorswim related, some just quick and dirty on how to customize a monitor tab, that kind of thing. Okay, so coming back to our regular programming. So that's MasterCard. Let's look now at Triple M. And so, we can look at this, it gapped up and it's been kind of going sideways, hasn't it? But it's caught up to this 100-day moving average. It's now above the 100, the 30, and the 10. So could we come out here and maybe sell something below that 128? So if we come to the trade tab and, if something's going sideways, we're okay with that as long as we can sell something underneath where we think it's going to trade for the next several weeks. Okay. So if we come here to the trade tab and we look out 3 weeks and we say, okay. Well, when I look at this isn't a lot of volume and we'd want to sell this, say 128. I've got 47 contracts, and my bid ask spread is 10 cents. So that's kind of, that might work. So if I have 128, 127, I've only got 11 contracts here. It's a little bit light, but we could give it a shot. If we come out to the monthlies though, I've got thousands of contracts here, but then I've got to go either 130 or 125. And I'm coming out 43 days, which means I want a 43% return on my risk. So that's not likely to be a fit. So let's give this a shot. So I'm going to get 19 cents on a dollar wide spread. And, I want at least, typically we want at least, we want at least a 22% return. So if I can only make 18 and I'm going to divide that by 80, I'm risking 82. That's 21.9. That's just a little thin. So we could say, well, maybe we want to watch this, but we're going to pass on this one and see if there are some ones that have a richer premium. So we're going to pass on that. And that's the reason, that's our reason why. It's just a little thin on the return. If we can get a juicier return, we'd rather do that. So speaking of juicy returns, when you want a bigger return, what do you want to look for? Well, you want to look for something that has higher volatility. Do you think Tesla might fit the bill? So Tesla today is hitting, at least a new 6-month high. Let's look at the 1 year. So it's a new 1-year high. This has really taken off, hasn't it, recently? We had this cup and handle type pattern, or if we come back further, this big cup and handle pattern, and it's continuing to move up. So it's breaking out today. Do we think, could we possibly sell something below the 360? Or could we even come down to this 350-ish range and get enough premium for it to be worth our while? Now it's trading at 370. Okay. So let's come to the trade tab and say, if we came out in that 20 to 50 day time frame, so this 22 days, could I come over here to the 350? So does this trade 1 million shares a day or more? Check. When I look at the 350, do I have lots of volume? Yes. Over 1,100 contracts traded today on the 350. Do we have a tight bid-ask spread? 15 cents. Yeah, that works. It could be 80. It's 15. We've got a delta of 29. This means we've got a 67% chance of it expiring worthless. Now, these numbers are fluid. They can change at any time. We're getting $1.60. Okay, yum. And why do I say that? Well, if you do a lot of these, it's 160 divided by 340. That's got to be close to 50% return on risk. Okay, 47. Okay, that's a go. And when we look at our strike, it's below today's low, right? And then it's, at this support level. So we're kind of looking to get below as many support levels as we can. So we're going to come back to our trade tab. How many of these are we going to do? We're going to do just one because we're risking 350. We don't want to risk 700. Now, if you had a bigger account and we're willing to risk $2,000, you might do more. You'd say, I'm going to do 5. And then our guideline on this is when we've got 80% of our max gain, we would like to exit the trade. So we're going to say, hey, when this is worth about 32, and I'm just eyeballing it. But if you want to get really specific, you could say, okay, if I'm making 157 times 0.2, that would give me, 80% of my max gain, 31.4. Okay, so we could make it 31. I was close. We're going to make this good till canceled, confirm and send, fire in the hole. Okay. Yeah, again, somebody's saying, hey, the average true range on this is 15 points. And you're absolutely right. And look at the volatility, 55%. This is a stock that moves a lot. Could this go wrong? Absolutely. But any trade can go wrong. And this is why we don't mess with our position sizing rule. That's a rule that we don't break. But here's our ATR, 1589, call it 1590, almost $16. So tomorrow this could go down through our strikes, or tomorrow it could go up. It could go up for 3 days. And we're willing to be in this for 22. We could be in it for 4 or 5. We just don't know which way it'll go. So there's Tesla. Okay, how about Goldman Sachs? Because this financial sector's been strong. Consumer discretionary has been strong. How do I know that? Well, when we come out here and we look at our sectors, and we say, which has been the strongest one over the last 3 months? Consumer discretionary, communications, technology, financials. What about the last month? Same group. Okay, so if we come and we look at Goldman Sachs, let's come out to a 6-month. So this thing gapped up and then hasn't really gone back, right? It's continued to move to the upside. We have a long call vertical on this already, but you know what? This has kind of pulled back. And then today we have this inside day at what could be a support level. And so could we sell something below these candles? And this is considered to be a Harami pattern and a complete pattern. Now, are all patterns a guarantee? Well, no pattern's a guarantee. But if we look at this and say, could we sell something 595 or below, maybe even 590? So let's come out to our trade tab. If we come out to this 3-week time frame, look at the 590. So we've got about a 45-cent bid-ask spread. Does that meet our parameters? Yes. Trades, well, it's close to 1 million and we still have time left to go. 57 contracts. We're probably only going to do one. So yeah, we're good there. So we're going to look at selling a vertical, $1.60. Well, we just did the math on that, right? Like 160 divided by 340. That's like a 47% return. So we have two choices. We can say the market's been really bullish. This stock has been bullish. The sector's been bullish. So I think I'm going to just, I'm going to roll with this. And, this is a more bullish entry. Or you might say, I'm willing to take a little less and go to 585. I mean, you can do it either way. We're going to stay with this. First trigger sequence, right click, opposite order. And notice how quickly we're able to look at these. So 32 cents, we want to buy it back. Good till canceled, confirm and send. And notice that I placed the trade exactly the same way every single time. Why do I do that? Because then I'm less likely to mess it up. Now, are there still chances I might make a mistake? Well, we watch me make mistakes all the time. So yes, it's not infallible. But I'm selling a put vertical because I'm bullish, right? Right. For $1.60 on Goldman Sachs. We're going to put it in our short put vertical bucket. How much could I lose? 340. Is that under 500, 550? It is. So we're good there. How much can I make? 160. You may say, well, that's not going to have me drinking anything out of a coconut in Tahiti. And you're right, it's not. But it might pay your electrical bill this month, virtually speaking, or take you out for a nice paper money dinner, or maybe buy you a Christmas present. You start racking up these base hits, it can turn into something. We started with 20,000 last November 1st. We're at 44,600. Now, is this a typical year? No. This is double the return we normally get in a year. But is it possible? Yeah, you start earning these little bits, and we've had some really big losses too. Bigger than they should have been because of moi. Okay, so there's our third one, Goldman Sachs. How about the Netflix? Anybody ever watch Netflix? Yeah, I had friends that recommended this series. By the 10th time I heard it, it's like, I shared my friend's Netflix account for about 15 years. And it's like, I'm going to have to suck it up and buy my own. So you're wondering why Netflix is doing so well. It's like millions of people like me who are now paying for their own Netflix subscription. But this has broken out, hit a new all-time high today. And this is heady stuff, like $927. We have a $40,000 account, $45,000 account. We couldn't buy very many shares, but could we do a long call vertical? Well, we may do that in class tomorrow, but our topic for today is short vertical. So if we're thinking this might continue on up, and you might say, hey, this is due for a pullback. Yeah. Yeah, no, Luke, you're right. 15 years. Yeah. I keep my friends a long time. Yeah, so here's this. If we see a support level around 902, it's now around 923. Could we come out below that? So could we come out here? And again, I'm coming to, the expiration date du jour, the 22nd, and saying, could we sell this 900? Again, this is a $900 stock. And yeah, $1.6 million it's traded. That's shares of stock. So, and then when we look at this, these numbers aren't high, but we had 46 and 66 on these traded today. So we're good. Our bid-ask spread, 50 cents on a $12 option. We're good to go there. So, we want to do the 900. Sorry. So, and we're selling a vertical. $1.45. Well, does that meet our parameters? Yeah. We want to do the math. 145 divided by 145, 355. 40% on for something we'd be in for 22 days. Yep. Meets our parameters. First trigger sequence, right click, opposite order. When it's worth about 29 cents, we'd like to buy it back. So what if it gets to the point where it's worth, 33 cents and it looks like it's going to start pulling back? Could we exit the trade? Of course we can. We look at these daily. And just FYI, speaking of that, short put vertical. Okay, so that's Netflix, fire in the hole. So if we come and look at the monitor tab, you can see that we had 2 trades on Reddit that I closed out. Now, these are not short vertical trades, but for those of you who come to trading a smaller account, this is something that didn't quite reach our target, but let's just look at this. And I'm only bringing this up because there are rules that we don't break. So one of the rules we don't break is our position sizing rule. But one of the guidelines or things we can modify is we had a target here of getting out of this trade when it went up to 158. Yesterday, it went up to 157.75. Wouldn't that frost your petunias? And now today it's at, it's currently sitting at 155.65. It hit 156.67, but yesterday it was 25 cents away from our target. And this candle pattern is indicating it could just well go up again tomorrow. But if it pulls back, we're so close to our target, I started humming Steve Miller's Take the Money and Run, and we exited both the long call and the long stock position. So just because you have a target doesn't mean you have to wait till the bitter end and risk snatching defeat from the jaws of victory. Okay, so the vote is 64%, by the way, going back to our Oracle trade to, just call it a day. So we are going to come to Oracle, and I've organized these alphabetically, and you can see we have a lot of trades on here. We are going to cancel and replace. And I'm going to hit the little lock and say, we wanted to get out for 14 cents. It's saying, it went from 197 to 230, well, 217. So, that still is $38 away from max loss. And, we're also, because we're in the money, we're risking assignment. So we're going to put in an order to exit. And we're locking in our loss, but we're also eliminating the risk of assignment, and we're avoiding taking max loss. So here's one of those ones that didn't work out. Skylo is saying, ever widen the spread. Yeah, we've had conversations around this in the past. So let's look at another example. So let's look at how about Amazon? So here we have one where, it's up 45% year to date. Anybody shop with Amazon? I was a very late adopter on that, but there are a lot of Amazon packages that come by my house these days. Although I prefer to shop locally when I can, but it broke out yesterday above this kind of 215.50-ish high and is moving on up, hit a new probably all-time high today. So could we look at this and say, could we sell something below the 215? Okay. Andy, you know what? So Andy on the Oracle trade is saying, what are the odds that they would assign before the end of day tomorrow? Well, anything can happen, and it's really random if somebody chooses to exercise their right and you are the one assigned, it's random. So it could happen. And I don't know what the probability of that happening is. But I do know if it's in the money, at expiration, that you would be assigned. Now, the problem comes in, and I did a mini session on this, is if it rallies at the end of the day and then it ends up in between your strikes. So then the short strike is exercised and the long strike would expire worthless. And you only have until 5 o'clock Eastern to call if you want them to exercise the long strike. Okay. So it's just avoiding a lot of anxiety, and my stomach lining is worth too much to put that at risk. That's how I look at that. So we're going to come and look at this. Could we sell this 215? And if we come out here and we say, okay, heavily traded stock, obviously, we look at our spread is 7 cents. That's a lot lower than the 22 to 23 cents it could be. We've got lots of volume. So if we do the 215, it will automatically assume we want the lowest spread, the tightest spread. This is $1. So that's $1.08. So it's a little over a 25% return on risk. If I double my risk and make it a wider spread and go to the 205, which we can do, am I going to get double the premium? That would be 216. No, I'm only getting $1.65. And so if I take my 216, which would be double the premium because I'm doubling my risk, minus my 165, I'm $51 short of getting an equivalent amount of payment for the second dollar of risk. Okay, so when we look at that, it's like, yeah, I'm paying double the commission if I'm in a position, if I have $1 million account and I want to place 4, 5, 6, 10, however many trades. But if I look at this and say, for the extra $1.30 to get in, 65 cents per leg per contract, and $1.30 for the extra 260, I'm better to do 2 contracts at 215 and 210 than I am to do one at the wider spread. Now, the other advantage you have with a wider spread is it's less likely to go through both strikes. The likelihood of it going through both strikes is 4% lower. Or 7% lower. This is a delta of 17. Well, here, the probability of it being in the money. But we're going to do this 200, 215. Now it's at $1.89. Like, wow, because I made it 200 and it was supposed to be 210. But you see, like now I've tripled it and I'm not getting anywhere close to triple the return. I'm getting $1.09 for $5 worth of risk versus $1.89 for 15. So I hope that answers your question. Okay, so $1.08, single order, first trigger sequence, right click, opposite order, 20 cents. Good, chill canceled. Confirm and send. Bring it up. Does this make sense? It's trading at 221. Our strike is at 215, so we've got $6 worth of wiggle room. We're bullish, short put vertical. It's a weekly expiration. We got that. We know that because we just did an example of getting out of a trade for a loss. We know that we could lose up to 393. The most we're going to make is 107. Base hit. Yes, we would double the number of contracts. We wouldn't double the strikes. Okay. So let's have a quick look at Palantir, because there's been a lot of chit chat about Palantir these days. Like, look at this stock. It's gone from 21 to $73 a share since August. Like, that's insane. It's up over 300%. But when I look at this and I'm looking for an entry, like, do I see it breaking out? It's a trend continuation. And so I'm not seeing kind of where I'd put my strikes, maybe around the 67. But if I'm looking at these, I'm thinking, maybe, and I posted this chart on X, I think yesterday, maybe I'd rather be looking at this where there's this big cup and handle. And somebody that responded on X today and said, like, now this is what I see everywhere I go, because it's like, well, I've been posting a lot of this pattern because I've been seeing a lot of it. And so here's a $380 stock. And, could we come down here and sell something like at that 385, 380? Yeah. Yes. Palantir is on fire. So this is going to have to be our last one. But, it's trading at 401. So might this, because it looks like this has been acting as a support level. So let's come down, say, hey, if I do this 385, that's a delta of 25. We wanted something in that 20 to 40 range. Oh, you know what? One contract, nothing today. Well, that kind of stinks. So could we come to December? And what did we want our strikes to be? Charter, 385. Okay, well, here I've got 40, but this is only 15 days. Like, chances are, like, am I going to get enough premium for this to be worth my while? Maybe not. Well, if I can get 92 cents on a $5 spread, I'm risking 405 to make 95, but I'm only in it for 2 weeks. So that would meet our, requirement, but you're looking at maybe barely 20%, and you could lose up to, 405, well, 408. That's a 22% return. So for that one, we're going to pass. And this one, well, it's a very expensive stock. So I'd cut it a bit of slack here, but you're right. It's under 1 million shares volume wise. And I don't know where my volume bar went. I guess I got to fix that. But guys, we've done a lot today. So we looked at Triple M and said no. We looked at Charter and said, yeah, we're going to pass on Charter. So we did 2 where we took a pass. We exited, one of our trade gone wrong examples. So we got out of Oracle, but we entered new trades on Tesla, Goldman Sachs, Netflix, and Amazon. Not bad for 45 minutes. And we chit-chatted about why we were doing what we were doing and why we were saying yes and why we were saying no. So I appreciate you being here. I don't believe there's a survey in the chat today, so you're off the hook for that. So, but I would love it if you'd follow Kevin and I in the land of Twitter. So that is Barb Armstrong CS, Kevin Horner CS. So I send you that invitation. The other thing, I'd love it if you would hit the like button. That just lets people know that you found this content valuable. It's your opportunity to do your good deed for the day without leaving your desk. And it moves it up in the algorithm, so it helps us get the word out to more people. So thank you for joining us. Hit the subscribe button. Thanks to Kevin for all his work in the chat. Oracle, we got out of, Robin. We said, see you later. Love you, just not today. Yeah, so we exited that trade. Yeah, so guys, have a really awesome day. Up next is Connie Hill with long options. You'll want to stick around for that. I'll see you tomorrow in trading a smaller account, and watch for that mini session coming your way in the next day or two. Take care, everyone. Bye for now.